Good day Forex trader. Your USD Forex signal, ahead of Eurozone GDP data. The path of the least resistance for the pair is to the downside. Bearish view. Sell the Euro USD pair and set a take profit at 1.1250. Add a stop loss at 1.1360. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1320 and a take profit at 1.1400. Add a stop loss at 1.1250. The Euro USD pair retreated sharply in the overnight session after a speech by Christine Lagarde in which she reiterated about ECB policy. The pair is trading at 1.1306, which is the lowest it has been since February 3. It has fallen by more than 1.6% from its highest level this week. Christine Lagarde on monetary policy. In a statement on Monday, Lagarde, the ECB chair, reiterated that the bank will embrace a gradual pace of tightening even as inflation keeps rising. Analysts expect that the bank will deliver about 2 rate hikes this year. These rate hikes will be fewer than those that the Fed and the Bank of England will deliver this year. Recent data showed that the bloc's economy is doing well, with inflation rising and the unemployment rate falling. For example, data published last week revealed that the headline Consumer Price Index jumped to the highest level in decades. Inflation will likely keep rising considering that the cost of energy in the region continues to rise. The situation will worsen if Western countries add sanctions on Russia, which is the biggest seller of oil and gas to the Eurozone. Later today, Olaf Scholz, the German Chancellor, will hold negotiations with Putin on the way forward. He is expected to ask Putin to engage with diplomacy and then warn him about the impact of sanctions on his economy. Meanwhile, the Eurozone unemployment rate has crashed to the lowest level on record as the recovery accelerates. The next key catalyst for the Euro-USD pair will be the upcoming Eurozone GDP numbers. Economists expect the data to show that the bloc's economy expanded by 4.6% in the fourth quarter while its trade dynamics improved. The main laggard during the quarter was Germany. Euro-USD Forecast. The 4-hour chart shows that the Euro-USD pair formed a double top pattern this month. Recently, it managed to move below the pattern's chin at 1.1396 as investors rushed to the safety of the US dollar. It has moved below the 25-day and 50-day moving averages while the MACD has moved below the neutral level. The pair also moved below the key support level at 1.1331, which was the highest level on February 2. Therefore, the path of the least resistance for the pair is to the downside. If this happens, the next key support to watch is 1.1250. Gbp Usd Forex signal, double top points to more downside. There is a likelihood that the pair will drop to the next key support at 1.3344. Bearish view. Sell the Gbp USD and set a take profit at 1.3344. Add a stop loss at 1.3600. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3550 and a take profit at 1.3650. Add a stop loss at 1.3450. The Gbp USD pair retreated in the overnight session as traders waited for the upcoming UK jobs and inflation numbers scheduled for Tuesday and Wednesday. The pair is trading at 1.3520, which was about 0.92% below the highest point last week. UK jobs data. The main reason why the Gbp USD pair retreated is that demand for the US dollar jumped as investors rushed to safe havens. Investors are afraid about the impact of a Russian invasion of Ukraine and the likely implications. The US continues to believe that Russia has the troops and equipment that it needs to carry out an invasion. It believes that this invasion will take place before the Winter Olympics ends. The impact of this invasion on the UK economy will be great because of natural gas. With many UK energy companies going out of business, the impact will worsen if gas prices soar. The next key catalyst for the Gbp USD pair will be the upcoming US economic data. Economists polled by Reuters expect the data to show that the country's unemployment rate declined from 4.1% to 4% in December. The most important number will be wages, which the Bank of England is focusing on as it changes its monetary policy. Analysts expect the data to show that the average wage minus bonuses declined from 3.8% to 3.6%. With bonuses included, analysts expect the data to show that wages slowed down from 4.2% to 3.8%. These numbers will come a day ahead of the UK inflation numbers. Economists expect the data to reveal that the headline inflation rose to 5.4% in January while core CPI rose to 4.3%. The data will come almost 2 weeks after the Bank of England, BoE, published its interest rate decision. The bank caught investors off guard by hiking interest rates for the second straight month. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd pair has been in a strong bearish trend in the past few days. The pair moved to the 38.2% Fibonacci retracement level. It has moved slightly below the 25-day and 50-day moving averages while the MACD has moved below the neutral level. A closer look shows that the coin has formed a double top pattern whose chin is at 1.3490. Therefore, there is a likelihood that the pair will drop to the next key support at 1.3344. Aud USD Forex signal, bearish consolidation above 0.7082. The AUD is lower after the RBA minutes release suggests a slow rate hike. Today's AUD USD signals. Risk 0.75%. Trades must be taken before 5 p.m. Tokyo time Wednesday. Short trade idea. Go short immediately upon the next touch of 0.7293. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7082, 0.7006, or 0.6963. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Aud USD Analysis. The Australian dollar has been falling over the past 4 days and continues to inch lower and approach the nearest key support level against the US dollar at 0.7082. The Reserve Bank of Australia just released the minutes of its most recent policy meeting a few hours ago, which showed that the bank is determined not to raise its interest rate until inflation and jobs are showing more momentum. Markets take this as a slightly dovish monetary policy tilt, so it is logical that this will help the Aussie's recent bearish trend. We have seen the price trade a little lower since the release, but nothing spectacular. Although the price looks bearish over the short and medium terms, it is worth noting that the price has lots of room to rise before it would meet any resistance, with no key resistance levels below 0.7293. This means that if we get a bullish reversal at 0.7082 later, it could be a great long trade opportunity in terms of risk to reward. However, it is also important to remember that if fears persist of war between Russia and Ukraine, we will be unlikely to see a risk barometer currency such as the AUD rise much against the USD, which will be in some favor as a safe haven, not to mention its underlying strength due to its long-term bullish trend. Unless we get some news of a deal that will prevent war, I think that today will be a down day in this currency pair, meaning day traders might profit from selling rallies when they turn bearish here, and not waiting for resistance levels to be reached. A more conservative approach would be to wait for the price to get established below the support level at 0.7082 and then use it as resistance for a trade entry point.